Welcome to the deep dive. So, late April 2025, it's an interesting market landscape, wouldn't you say?
Definitely. Risk appetite seems cautiously better, but you've still got those familiar uncertainties hanging around U.S. policy, trade, and just this constant stream of high-impact data coming up.
Right, and the result is volatility. We're certainly seeing that play out in gold, aren't we?
Oh, absolutely. Which brings us to our mission today. We're digging into recent gold and Forex forecasts, looking at technicals, fundamentals, specifically for the London session today, April 29th, and then broadening out to the next few days, say up to May 1st.
So the goal is really actionable intelligence for traders already in the thick of it, focusing on gold and the majors.
Precisely. Extracting those key insights and trading considerations.
Okay, let's jump straight into gold then. XAUUSD, London session's kicking off. Where are we positioned?
Well, we're trading near those elevated levels, $3,340 up to maybe $3,351.05.
Still quite a bit below those recent record highs, though, near that $3,500 mark.
Exactly. And it feels like consolidation after the pullback. You remember that sharp dip below $3,000 early in April after the strong U.S. non-farm payroll?
Hard to forget. A stark reminder of the volatility, yeah.
So this current consolidation, it feels like it could be building towards something significant. Volatility is still high, especially around the London Open.
Okay, so let's nail down the technicals.
Yeah.
What are the key support levels traders should be watching right now in this London session?
Right. So immediately you've got minor support around $3,340. Below that, it gets more significant. $320, then $306.74, and of course the psychological $3,300 level.
And if those break?
Then you're looking at the value area low around $300 and $287. Then there's a really critical band between $300, $207 and $300 and $275. Below that, $3,265 is pivotal. A break there could signal a move towards the $300 and $350 corrective target.
Okay, quite a few steps down. What about the upside? Where's the resistance?
Initial hurdle is right around $300, $350. Some analysis flags that as a potential spot for bears to enter.
Interesting. And above that?
You've got the 3365 zone, then $3,366, and a pretty key level at $3,370. Then there's this area marked as a trap sell zone between $3,372 and $376.
A crab sell zone.
Okay.
And further up?
Beyond that, it's the big psychological $3,400. Then you've got pivot R2 at $3,414, an upside target near $342.25, $330, and eventually pivot R3 way up at $3,162.
That's a dense map of levels.
Yeah.
What are the indicators telling us? It sounds a bit conflicting, maybe.
It really is a mixed bag. Look at the daily RSI. It's around 58.59, technically a buy. The H1 RSI is more neutral to bullish, like Frinker 75 and 85. There's potential bearish divergence on the weekly, and we saw recent bearish divergence on the H4 too.
Okay, so short-term, longer-term caution. What about MACD and the moving averages?
Daily MACD shows buy, but the H1 XCD actually has a sell signal right now, though it looks like it might be trying to turn.
In the MAs?
Daily price is above most moving averages, giving a buy summary there. But crucially, it's currently below the SMA 5 and the 9-day MA. On the H1, we did see bullish crossovers of the MA20, MA50.
Any other signals jumping out?
Well, the H4 chart showed a hammer pattern near the lower Bollinger Band that often hints at bullish potential, but there's still that risk of a correction down to $3,250. And stochastics. Daily is overbought. H1 is elevated, but not quite technically overbought yet.
Any chart patterns taking shape?
That H4 hammer is one thing to note, suggesting a potential reversal. Some also see the current action as either a distribution range building up or possibly even a bullish flag within a broader rising channel.
So yeah, definitely conflicting signals. Daily leans bullish, but short-term it's consolidating. There's distribution risk, and those big overbought warnings linger. Tension, basically.
Exactly. Tension between the underlying momentum and these very real corrective risks.
Okay, let's pivot to the fundamentals for this London session. What's hitting the wires around, say, 8 a.m. London time that traders need on their radar?
Okay, several things clustered there. UK's BRC shop price index is out, probably priced in already. The main action is Eurozone.
Right. What do we get?
German GfK consumer confidence for May. Forecast is a slight dip. If it's weaker, could, maybe hurt the euro a bit, give gold a tiny lift.
Okay, what else?
Spanish flash CPI and HICP for April. If inflation comes in lower, that could fuel those ECB rate cut expectations, potentially weakening Euro USD, which often has an inverse relationship with gold, right?
Got it. Inverse correlation.
And Spanish flash GDP for Q1 is also out, Weaker growth there could also weigh on the euro. And finally, ECB's Cipollone is speaking.
Central bank speak, always a potential mover.
Absolutely. Any comments on policy, inflation, economic risks that could definitely move the euro, and indirectly, gold?
And beyond those specific releases, what are the broader fundamental winds blowing?
You always have to watch the overnight sentiment from Asia. How do they react to geopolitics, U.S. Treasury yields, the dollar index, and of course, everyone's looking ahead to the U.S. data later today.
Consumer confidence and jolts.
Exactly. If that U.S. data shows weakness, that could certainly support gold. So the real crunch time is that Eurozone data and the ECB speech hitting around 7-8 a.m. London time. How the market digests that in the context of ECB policy and how they're positioning for the U.S. numbers, that's pivotal.
Okay, let's synthesize all this. Technicals, fundamentals. What's the synthesized forecast for gold in London? And crucially, what are the levels to watch for actual trading decisions?
All right. The overall bias leans cautiously bullish, but expect high volatility, and the risk of a pullback is definitely there. The underlying trends suggest buying dips is still the way, but those overbought readings and resistance nearby mean upside might be limited without a new reason to buy.
So maybe range-bound initially.
Yeah, an initial range between $320 and $370 seems likely. Now, scenario one, bullish continuation. If we hold above $330, maybe helped by weak Eurozone data or anticipation of soft U.S. data, then we could test that 364, 165, 376 resistance.
And a break above that zone.
A solid break above $376 is needed to really signal renewed bullishness, targeting $3,400 and then $314.
Okay, scenario two, the pullback.
If $320 support fails maybe strong Eurozone numbers or just bad risk sentiment, then you're looking at $300 and $287 first, and that critical $375.
And if that critical zone breaks?
A break below $260 would suggest a deeper correction is underway, targeting $300, $250, possibly even $300, $225.
So key levels for London. Support $300, $320. Resistance, $300 and $370. Bullish confirmation above $300, $376. Bearish warning below $373. Bearish confirmation below $300, $260.
Got it. Exactly. Strategy-wise, caution is key with these conflicting signals. You could play the range between those immediate levels, or maybe wait for a clearer breakout above $376, or a breakdown below $320, or even $3,260.
Absolutely. And selling rallies near that $365, $366 resistance targets a pullback, but you'd be trading against the main trend. So again, manage risk carefully.
All right, great detail on gold. Let's broaden out to the major Forex pairs now. Nearer term outlook, say next 1 to 3 days up to May 1st. Tier 1 data is going to be huge here, obviously.
Huge. It's really all about the data this week. And just as a quick reference for everyone listening, we've compiled the key support, pivot, and resistance levels from multiple analyses for USD, GBP USD, USD JPY, AUD USD, and USD CAD. Think of it as a cheat sheet for the week.
Excellent. Let's start with USD. What's the immediate picture and bias?
Okay, USD has been bouncing around between roughly 1.136s and $1.1421. The short-term uptrend is still technically intact. It's above the 100-day EMA, but it's consolidating after hitting highs near 1.1574.
Anything worrying for the bulls?
Well, that bearish pin bar on the weekly chart is something to keep an eye on. Beyond the summary level, support sits around 1.1274-1.1301, while further resistance is up near 1.1500, then 1.1517 is a potential breakout, targeting 1.1535 and those recent highs around 1.157374.
And technical indicators.
Daily RSI is above 60, so that's bullish. Stochastics turned up from oversold. Weekly MACD is bullish too. There's even maybe a triangle pattern forming, suggesting more upside.
But lots of event risk, right?
Absolutely. German GfK today, Eurozone CPI and GDP later in the week, ECB speakers, plus all the U.S. data. Volatility is almost guaranteed.
So the overall sentiment?
It's constructive, leaning bullish, as long as it stays above that 1.1349 to 1.1369 support zone. Probably more consolidation before the big data hits. A break above 1.140, especially 1.1423, reinforces the bullish view towards 1.1461, maybe 1.1500 plus.
And the downside risk?
A break below 1.1349 warns of a deeper correction, possibly down to 1.130 or even lower. It really hinges on that U.S. versus Eurozone data comparison and what it means for the Fed versus the ECB. Stronger U.S. data could challenge the uptrend. Weak U.S. with stable Eurozone could fuel that move to 1.1500.
Okay, let's shift to GBP/USD cable. It's been strong, but consolidating now.
Yeah, cable's around $1.33, 1.3320 cents, just under those multi-month highs near 1.3423, DAX 1.3434. The uptrend was really strong, broke out of a prior range, but it recently slipped below a short-term ascending channel. That hints momentum might be waning a bit.
Okay, a potential warning sign. Levels to watch.
Beyond the summary table, support comes in around 1.3240, then 1.3112. Resistance is up at 1.34880, which is near the top of that channel it broke. Then 1.350015, and looking further out, the Feb 2022 high near 1.3644.
Indicator readings.
Daily RSI is still above 50, so bullish overall, but it did get near 70 up at the highs. One thing to note is declining volume on the H1 chart during the latest push higher sometimes. That suggests exhaustion. We did see an H4 hammer earlier suggesting rebound potential, though.
Event risks for GBP.
Bowie's Ramsden speaks today. Then there's all the U.S. data. And remember, the recent UK PMI showed contraction. So factors on both sides.
So summing up the GBP/USD outlook.
Near term, still bullish above, say, 1.3274, which is the 9 EMA, and the 1.3300 handle. But that channel break and the exhaustion signals mean you need to be cautious. A push above 1.34000, 1.34 targets, 1.350.
How support fails.
Failure to hold 1.3274 could see a correction towards 1.32 hour zero, or maybe 1.3112. Sentiment is generally bullish but watchful. Pullback risk is definitely present. It's a battle between Bowie rate cut expectations and what the U.S. data does to the Fed outlook. A break below that 9 EMA at 1.3274 is your short-term bearish trigger. Oh, and April seasonality tends to be strong for cable, worth remembering.
Good point on seasonality.
Yeah.
Okay, USD/JPY. That V-shaped bounce was pretty dramatic. Where does it stand now?
Yeah, quite the rebound. It's trading between, say, 142.06 and 143.0 now, after bouncing hard from below 140. Snapped a 3-week losing streak. But let's not forget, the broader trend is still bearish.
Right, context is key. Levels.
Beyond the summary, more support lies at 140.75 than that key 139.58, 140.49 zone. Resistance comes in at 144.50, old support, and then 146.95.
Technical signals on this bounce.
The H4 NCD has bullish convergence, suggesting the low might hold for now, but it's still below major long-term MAs, like the 200-day around 150.19. The H4 alligator indicator has turned up, showing corrective momentum, but RSI is pretty neutral.
Big week for Japan too, right?
Definitely. Prelim industrial production tonight, then the big one. The Bank of Japan policy rate statement press conference later in the week, though timing is tentative. Plus, U.S. data and global risk appetite are always huge for USD/JPY.
So forecast. Bounce continues or fades?
The near-term bounce looks likely to hit resistance around that 144.000, 144.000. If it can't get through 144.000 convincingly, the focus shifts back down, maybe a retest of 140.00.
And if it breaks higher?
You'd need a really convincing break above 144.60 and ideally 146.95 to suggest this isn't just a correction and maybe a more substantial low is in. Sentiment is still broadly bearish despite the recovery, and COT reports show extreme speculative positioning, which often precedes reversals.
So the key question is, corrective bounce or real reversal?
Exactly. The BOJ meeting and the U.S. data's impact on yields and risk sentiment will be decisive.
Okay, let's look down under AUDSD. Rallied hard, but seems to have hit a wall.
Yeah, the Aussie's around 0.6390, 0.6418. It had that strong rally from below 0.60, a nice V-bottom formed. But the upward momentum seems to be fading now. It's consolidating near resistance.
Where's the key resistance and support?
Key levels beyond the summary table, support at 0.6315, a target, the psychological 0.6300, and then a big zone between 0.6179 and 0.6200. Resistance is up near 0.6487 and then 0.6502 up to 0.6550.
Technical picture.
Daily chart shows it's struggling right near the 50% fib retracement of the last big down move and also near the 200-day EMA. That bearish pin bar that formed below 0.640 is quite telling.
Any other signs of fatigue?
Yeah, like cable, we saw declining volume on the H1 chart during the rally suggests exhaustion. The weekly chart printed a doji candle signaling bullish hesitancy, and stochastics are overbought.
Big data for Australia too, isn't it?
Huge. Q1 CPI, including the trimmed mean, is out Wednesday. We've got an RBA speech today. Plus, Chinese manufacturing PMIs later in the week, U.S. data, and U.S.-China trade whispers always matter for the Aussie.
So the outlook is?
Near term, it feels neutral to cautiously bearish. That resistance around 0.6400, 0.6440 is pretty solid, making a pullback seem more likely. A break below 0.6370 or maybe 0.6348 could open the door to 0.6300.
What would it take to resume the uptrend?
You need a clear break above 0.640. That Aussie CPI data is crucial. If it comes in soft, expect RBA rate cut bets to jump. They're already implying around a 62% chance for May, and that would likely weigh heavily on the AUD. Sentiment's mixed because of this technical stall.
So, confluence of resistance and potentially dovish CPI, pullback odds seem higher?
Seems that way, unless inflation really surprises to the upside.
Okay, last pair. USD CAD, the loonie, bouncing off lows.
Yeah, second day bouncing off those 6-month lows near 1.3780. It's trading around 1.3890, 1.390 now. But importantly, it's still stuck within a descending channel. The primary trend remains bearish. It fell quite sharply, like 6.9% from the yearly highs.
So the bounce is hitting channel resistance.
Exactly. It's testing a confluence right now. The 9-day EMA around 1.3886 and that upper channel boundary near 1.3900.
What else supports the bounce technically?
The H4 and SCD shows bullish convergence, which backs the bounce idea. And we saw an H4 hammer earlier too, similar to cable and gold actually. Daily RSI is neutral.
Key levels beyond the channel.
Further support is at 1.3714, then 1.3614, and the lower boundary of the channel is down near 1.3500. Additional resistance above the current test is at 1.4025, and the 50-day EMA around 1.4123.
Drivers for USD CAD.
Canadian GDP for February is out Wednesday, all the U.S. data, of course, and oil prices are always a factor for the loonie. The BOPC Business Outlook survey came out earlier, worth keeping in mind too.
So, forecast for the Lenny, critical test right now.
Absolutely critical test at this 1.3886, 1.3900 resistance zone. If it gets rejected here, expect a retest of the lows near 1.3780.
And if it breaks out of the channel?
A break above that 1.3900 channel resistance, and ideally above the 1.4000 psychological and technical level, would be needed to even start thinking about a shift in the downtrend. Canadian GDP and U.S. data are the main drivers this week.
Sentiment overall.
Still cautiously bearish because of that channel, but you have to acknowledge the bounce potential if this resistance breaks. April also tends to be seasonally bearish for USD CAD, another factor. It's really a battle right here at channel resistance.
We've covered a ton of ground. This week is clearly packed with potential market movers. Let's try to summarize the overall market feeling and risk factors.
Okay, so broadly, risk appetite has improved a bit from those early April lows, but there's still this underlying caution. You sense some hesitation towards U.S. assets, maybe trade policy, economic direction worries.
And the market's really focused on the Fed, right?
Definitely. Seems like the market's anticipating Fed easing, which makes sentiment super sensitive to any data on inflation or economic resilience. Is the economy strong enough to delay cuts or weak enough to accelerate them?
How's the U.S. dollar looking in that context?
It's mixed. You've got downward pressure from the twin deficits, maybe lower global demand for U.S. debt, those Fed rate cut expectations, but then you get safe haven flows sometimes, and some U.S. data has been resilient. Upcoming U.S. numbers are absolutely crucial for the dollar's direction.
And gold sentiment? Still fundamentally bullish?
Underlying sentiment is bullish, yeah. Safe haven, Fed easing prospects. But, as we discussed, it's tempered by those very overbought conditions on longer time frames and the constant risk of profit-taking after such a strong run-up.
So what are the biggest risks that could derail these forecasts we've discussed?
Number one is probably stronger than expected U.S. data GDP, core PCE, JOLTS, consumer confidence, ISM. That could boost the dollar, pressure gold, URUSD, GBP-USD lower, and potentially help USD JPY and USD CAD.
Conversely, weaker data would do the opposite.
Right. Another risk, weaker than expected inflation data from Australia or the Eurozone. That could cement RBA ECB rate cut expectations, hitting the Aussie and Euro.
Geopolitics always a factor, too.
Always. Any unexpected flare-ups or even de-escalations in geopolitics or trade could drive sudden demand for safe havens, like the dollar, yen, and gold.
And central banks.
Any surprise, hawkish or dovish commentary from the BOE or ECB speakers, or significant guidance shifts from the BOJ policy meeting could definitely trigger currency revaluations.
So it feels like the market's really at a crossroads.
Exactly. It's balancing this improved risk mood with a heavy dose of event risk and policy uncertainty. This packed economic calendar is the main catalyst that could either validate the current trends or force some major reversals.
Okay, so just a quick recap for gold in London. Keep a very close eye on support at $3,320, resistance around $370. A solid break above $300 and $376 could signal more upside, while a break below $260 warns of a deeper correction.
That's the essence of it for gold right now.
And for the major Forex pairs, you've got those key support and resistance levels we talked about. Be ready for volatility, especially around the German GFK this morning, and then the avalanche of U.S., Eurozone, Australian, Canadian, and Japanese data hitting throughout the week.
Absolutely. Careful risk management, staying nimble, that's going to be essential, especially around those big data releases.
Right. So a final thought for you, the listener, to ponder as you navigate these markets this week. With all of these technical signals lining up and the sheer volume of critical data coming out, what single data point do you think holds the greatest potential to really disrupt the current market consensus, to invalidate what most people are expecting? And more importantly, how is your trading strategy positioned to adapt if that happens, if the unexpected occurs? Something crucial to think about. Thanks for joining us on the Deep Dive.